Good morning. I wanted to make a video based on a request that I got, a question that I got, which was to explain what a breaker is. And I know that if you are an ICT student, you probably already know what it is, or you probably already know how to identify one. But for those that have no idea, for those that may be experienced it also, and those that might be newbies, I hope would be able to benefit from this video. I will break it down systematically and make it as simple and easy as possible to understand. And hopefully by the end of this video, you'd be able to know and easily identify what a breaker is. So without using the charts, let's start off by explaining what it is from a logical point of view. So we understand as ICT breakers, as ICT traders in general, or SMC traders or whatever you may be trading, we essentially look for a liquidity sweep of some sort to trade the opposite direction of the market. In other words, if we had a swing low like this, typically what an ICT student would be waiting to see is a liquidity sweep of that swing low. So we would be waiting to see if this liquidity can be purged, and let's say price trades lower and purges that low, right? At this point, you would like to know if it's a continuation to the downside or a turtle soup or a simple sweep in liquidity. The only way we are able to identify that this is in fact a turtle soup and not just a continuation to the downside, as we highlighted being a possibility, is by, well, this is of course my preference, is by after liquidity is swept, I wait for a market structure shift. I wait for price to close above a previous swing high. In this case, we're looking at a buy example, right? A long in example. So we have this swing high right there. When price closes above it, the key point is closing above that previous swing high. So when price closes above that swing high, we can then consider this a valid market structure shift. So this is when you'd find me labeling on my chart MSS. And of course, this one would be a sweep in liquidity or turtle soup. It's the same thing. A turtle soup is basically somebody trading the opposite direction. So yeah, we got a sweep in liquidity, we got a market structure shift. And this is the point I will typically be telling you guys that I'll be looking for a fair value gap in the form of a buy side imbalance in this case, for me to wait for it to return to and buy it up. This is typically this is essentially the 2022 model. Wait for a sweeping liquidity, taking out people's stop losses, and those that are breakout traders expecting it to go lower would be selling when it takes out this low. So they would have jumped in, but now that we've taken them out and now that we've trapped people that are wanting to sell by giving them a massive drawdown, we now look for a continuation to the upside, because the damage has been done over here where the turtle soup basically happened, and now we are looking for a continuation to the opposite direction. So what makes a breaker in my opinion powerful is that it's basically an order block that failed and now became a breaker. Because typically right here there is a candle that's formed. I'm going to use the simplest of terms to explain this in this video. So right here there's typically a bullish candle, right? In other words, this candle right here was the one that was convincing everybody that we are gonna buy, we're gonna be pushing up, we're gonna be grinding up, everything goes to the moon, let's keep going, let's keep pumping, let's keep pumping. This is the candle that does the job. This candle, I consider it to be the, I guess you can call it the Judas swing. It's the sheep that leads the rest to the slaughterhouse, in my opinion. So this bullish candle reeled everyone in, making us believe and think that we're going to be pushing higher, only for us to get wiped out, to wipe all the stop losses of people that placed their stop loss there, only for them to wipe them out and now continue the opposite direction. And now everyone has that same thing of saying this thing literally just went for my stop loss only to finally go the way I wanted it to go, blah blah blah. It was because of this specific candle here. So that candle is the ICT breaker. That's the candle we pull out in price in time and expect it to be used as support to the upside. Of course, I don't have to be the one to say that a breaker is usually nice to be paired up with a fair value gap. So we have a breaker here, which I'm going to label now as a bullish breaker, and we now have a fair value gap here as well, which is the typical 2022 model. When you get a combination of a breaker and a fair value gap, to me, in my opinion, again, that's a unicorn setup. That's an A+ setup, of course, in context and general structure from a high time frame. So this is an ICT breaker. Of course, this is just a bullish example. The bearish example is the opposite way, but don't worry, I'm going to show us a few chart examples of breakers, and this is a list of a few breakers that were compiled by Miranda, which I'll link in the description. And she compiled this list from a trader called Grant. Well, his Twitter name is Finesse, which I'll also link in the description. So let's go over a few examples. I'm not going to go through all of them, just a couple of them, and hopefully with this explanation and those examples, an ICT breaker would make complete sense to beginners, intermediate traders, and hopefully advanced traders. So this is what her post looks like. Again, I'll link this in the description, and it's by Finesse, which obviously you can reach out to from here. So yeah, we've got I think about 50 examples of breakers compiled here, which is really cool. It's not all the possible breakers you could get, but it gives you a clear example based on the stuff I just mentioned of what an ICT breaker actually is. So let's start off with the first one. Looking at this, we can easily see that the first thing we got there was a liquidity sweep, right? We purged this high. Let's forget the fact that we tapped into this PDRA, but we got a liquidity sweep, right? And then purged the opposite direction, taking out a previous swing low. That swing low right there, the green candle. Notice how the highs, the two candles right next to it, are higher than the low itself. So we got a market structure shift there. But remember what I told you about the sheep that reeled in everybody. This guy right here, this red candle, this bearish candle, was the one that was making everybody think we're going down, we're selling, kill it, everything is going to hell. let's sell. And then these guys all came and rallied up and took out the stop losses of everyone that was selling from here. So this was a sweeping liquidity, and this guy is the suspect. This is the candle, the specific candle that we pay attention to and price could possibly return to for us to trade lower. So let's see. Looking down there, we can see price came up, tapped it, did not even bother coming into this fair value gap. It just came to tap the breaker and rejected lower from there. So this is basically an ICT's breaker. Let's see if we can get another example. We can see the exact same thing, a liquidity sweep, a shift in market structure by closing below a swing low right there. We closed below the swing low. But what was the last candle before that push up? This was the last bearish candle before the last push up to take out liquidity. So we can see price came back to it. Follow this red line. This red horizontal line is the body of the breaker, and notice how price came to it and rejected for lower prices from there. So yeah, and of course, as I said, finding a breaker coupled with a fair value gap is usually the highest probability setup. So notice how we came to the breaker, but also within this fair value gap right there, and price rejected lower, as you saw already. So that's example number 2. Let's see if we can get another example. Third one right there. This one is not the cleanest setup, but it's still the same idea. ignore this arrow for now. Let's use what we were breaking down. We got a liquidity sweep, a rejection to the opposite direction, a closure below a swing low. Notice that swing low there was closed. We closed below it. Even this swing low, we closed below it. But now the question is, which candle made us think we're gonna sell? It was this guy. This last bearish candle was convincing everybody to sell before we rallied up and swept liquidity. So when you can notice how price kept on bouncing at that last down close candle, kept bouncing as resistance in a way and rejected lower. This is a daily chart, so of course intraday you would have found a better setup to take this gold trade. Let's see if we can find another one. The same idea, liquidity sweep, rejection to the opposite direction, a closure below a swing low. Notice there's a swing low there. We closed below the swing low, so that's a valid market structure shift. Now we look for the suspect. This bearish candle, this guy was the one that reeled us in thinking that we were going to sell off, only to wipe us out. Then now price is rejecting the opposite direction. So notice how price came down to it and bounced as resistance and pushed lower. Of course, we also have that fair value gap there. As I said, fair value gaps coupled with breakers, usually the highest probability setups. And then we continued lower, as we can see. Let's find another one. I'm going to find a buy setup, then we'll end it there. So looking at this, the same idea, we got a liquidity sweep down there, a turtle soup, rejection to the opposite direction. Now what are we waiting for? We're waiting for a closure above a previous swing high. I can already see a swing high right there. That swing high, I'm waiting to see if we can get a closure above it. That's the first thing we're waiting for. When we get the closure above it, which one was the suspect? Which one made us think we're gonna buy up in the first place? It was this last bullish candle right here. So this last bullish candle made us think buy, only to get wrecked, and now finally decides to go our way. So let's see how price played out. We can see firstly we got a candle body closure above the previous swing high. This candle we closed above it. And then notice how price came back down to it, that exact bullish candle with a fair value gap. I know there's also a volume imbalance there, but this is MT4, so anything is possible. But we also have a fair value gap right there. From this candlestick's high to this candlestick's low, there's a fair value gap. We came down to it, fair value gap, breaker, setup, push to the upside. Probably going for that buy side liquidity now. So that's an example of a bullish breaker, just like we illustrated with the example I was giving moments ago. Same thing here, liquidity sweep. Let's actually see the next image. Liquidity sweep, trade to the opposite direction, closing above a previous swing high. And which one was the suspect that made us think we're gonna sell and buy the whole time? Was this bullish candle, or these two if you want to combine them both. But this bullish candle was the one that made us think we're gonna buy up, only to get wrecked and continued our way. So when price came down back to it, to use it as support of some sort, and then continuation to the upside. So that's basically an ICT breaker. I've given a few examples. You can all go through this yourself because I'm going to post the link in the description and identify breakers and high probability breakers. And hopefully this video, I think I've already made a video like this before, but hopefully this one clears up any ambiguity when it comes to an ICT breaker. Oh, and before I do end, let's see a live example happening right now on the Nasdaq. We have the 1 hour chart here on NQ from Friday's price action, NFP Friday. We can obviously see the same setup form. We got a liquidity sweep right there, taking out that swing high there. So that's our sweeping liquidity. What's the next thing we look for? A market structure shift to the opposite direction to convince us that we are indeed actually just bearish and price was just sweeping liquidity up there. Well, we got that. We got a valid closure below a swing low. So when we got that swing low, what's the next thing we look for? We look for the suspect, the one that actually made us think we were going to be bearish the whole time, only to get us wiped. And it was this last guy. This is our bearish candle, the last down close candle before the push to the upside and wiped liquidity. This is the ICT breaker. This is our bearish breaker. So I set an alert at this level, telling myself that I'm looking for selling opportunities this week, and the interesting part about this breaker is that we also have a fair value gap. And remember what I said about fair value gaps coupled with the ICT breaker is that they're usually the highest probability setups. And notice how finally today, being Wednesday, we tapped into the breaker and we're rejecting from it. Of course, price may still come back up into it because we have this huge range to work with. We might even come up to the consequent encroachment of the CB that we highlighted already there. So we might come back to the halfway point to the New York session and then continue lower from there. But yeah, this is a real life example of the ICT breaker. And of course, we would maybe expect price to come down to these lows, those lows, and probably the relative equal lows down there. But this was what I was looking for going into this week on the indices, specifically on NASDAQ. But I hope in me, given this expectation and the examples that are already given, you would all better understand what an ICT breaker is. So stay safe, good luck, and good trading.